This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set to extend Wall Street declines as oil and bond yields rise. Hostilities between the U.S. and Iran flaring up, with Kuwait and Bahrain caught in the crossfire. SpaceX officially files for the biggest IPO of all time, with Elon Musk to control 84% of voting power as he moves closer to becoming the world's first trillionaire. And with mega IPOs in focus, Bloomberg learns that Anthropic has lined up Morgan Stanley and Goldman Sachs to lead its offering.
We do have breaking news when it comes to this ever-developing situation between the U.S. and Iran. We're hearing now the U.S. saying that Israel and Lebanon have agreed to implement a ceasefire. The U.S. State Department announcing in a statement that as a result of U.S.-led negotiations, Israel and Lebanon agreeing to the implementation of a ceasefire that's contingent on a complete cessation of Hezbollah fire and the evacuation of all Hezbollah operatives from the South Litani sector, according to the statement. This announcement coming after a fourth high-level trilateral meeting between Israeli and Lebanese representatives that took place on June 2nd and 3rd in the U.S. And we know that really it is this activity and the tensions when it comes to what's going on in Lebanon with Hezbollah and between Israel that has really been at the core of the difficulties and challenges in being able to get that broader ceasefire between the U.S. and Iran going as well, given that there's been a lot of contest in terms of whether Lebanon and Hezbollah is part of that ceasefire at all. We have seen in the meantime the U.S. and Iran also clashing overnight. Kuwait and Bahrain, as Shery mentioned, getting caught in that conflict in the most serious flare-up that we've seen since that first ceasefire went into effect in early April. We are still waiting to see whether that extension can be done, but the U.S. military is saying that it came under missile and drone attacks. So we're watching oil at the moment. As we saw overnight, really crude holding that 3-day gain as these clashes continue to lower the deal prospects, but we should see a bit more optimism. And now that key issue perhaps between Israel and Lebanon may be seeing some sort of compromise, at least in the near term. Shery, of course, so much going on, and markets are really very much distracted by this huge pipeline of mega tech IPOs.
Yeah, this is really another story that's topping our agenda. This, as you said, in Haidi, could be the largest listing ever. SpaceX has officially filed for its IPO, aiming to raise $75 billion. The share sale set for June 11th should open the door to more mega IPOs and propel CEO Elon Musk closer to becoming the world's first trillionaire. Let's get more with Bloomberg U.S. Deals editor Michael Haidi and senior editor for Markets John Authers. Mike, let me start with you, because JPMorgan CEO Jamie Dimon himself personally pitching this IPO to ultra-wealthy clients nationally. How unprecedented is this?
Very. And they're going to need a lot of ultra-wealthy investors to get the $75 billion. Today's filing confirmed a lot of what has already been reported in terms of some of the basics, but it locks it in. It's $75 billion is the goal for the raise. That's going to have to come from a lot of different investors, including retail investors, and it will be the largest ever, period. It also puts the company at a $1.8 trillion valuation, which is bigger than all but 6 of the companies in the S&P 500 right now, and that includes Tesla as well, by the way.
John, it's a big test for the market, isn't it, even within the concentration of tech, because we've seen this urgency of first to market. Is this going to be a challenge of the depth and the ability of liquidity and market conditions at the moment? And what does it mean for the other IPOs, but also the non-tech parts of the market, which haven't already been keeping up?
Well, I personally, if anybody wants to put any money into this company when 84% of it is going to stay in the somewhat erratic hands of Elon Musk, that amazes me. I mean, the kind of marketing that is going on already has to be done with with a hand tied behind the back. That the governance of this company is extraordinary. It's just a remarkable step of confidence to ask people for that kind of money while really giving them no control, no say in how the company is being run in return. So if they do succeed in doing this, which I imagine they will, then that is a landmark in more ways than just the scale of the money raised, but the fact that people are prepared to accept entering into an IPO on these terms. I think in terms of the structure of the market, we had another fascinating landmark today, which is that Vanguard's VOO ETF has become the world's first ever $1 trillion ETF. So Elon Musk might become the first $1 trillion man out of this, but we already have the world's first $1 trillion ETF. The scale of index funds is obviously enormous. That's where the liquidity is. That's where the money is. And they are unable to make a call on whether the price is wrong. They have to accept the price. This will be a very interesting test of confidence in index funds should something go wrong. If you get index funds feeling obliged to buy in at bulk at the opening, if the indexes alter their rubric so that normally in the case of the S&P 500, you actually have to make a profit before you can join the index, which SpaceX hasn't done yet. Assuming that they are allowed in the index swiftly, then index funds will have no choice but to put a lot of money in there. If something goes wrong, that could dent the confidence in index funds, which are, like Elon Musk himself, now one of the great wonders, one of the great phenomena of the age.
John, but to what you said, I mean, the keyword seems to be there normally. This doesn't seem like a normal of times. No. When it comes to a question that Haidi alluded to earlier, given this raft of IPOs that we might get from the likes of Anthropic, OpenAI, with all of this artificial intelligence exuberance, is there any point in history that we could look back to and see where this could lead us?
Frankly, okay, no. If you want some things that give us some kind of a hint, Blackstone went to market in the summer of 2007, knew more about the credit market than more or less anybody else, and the credit market peaked about 2 weeks after it went public. Glencore, the great mining company, the mining conglomerate, commodities trading conglomerate that was built by Mark Rich, knew more about the metals market than anybody else, went public in 2011, almost the day when the metals bull market ended and went into a slide that lasted for years. So generally, when a lot of companies decide they're going to go public, or when big companies decide that have done well staying private decide it's time to go public, that's generally a bad sign. When insiders are selling, it's generally a bad sign. So I suppose I should temper that, because I can get too cynical and too jaded about this. The evidence is that the initial float will be very small, and there is plenty of other reasons why people are demanding equity while people are buying demand. There was a very interesting paper that I wrote about from Goldman. The amount of extra equity that tends to come into the market over the ensuing 12, 24 months after an IPO is some multiples of the amount that actually is put on offer at flotation, and that could be the problem. I don't think, amusing though it would be, or from a cynic's point of view, amusing though it would be if this actually called a top, I do suspect that the weight of these shares that are coming onto the market probably will bring a top sometime next year. The peak of .com IPOs was 1999. The peak was in 2000, largely when the founders had got through their lockups and were starting to try to turn some of their money into cash.
Mike, some of that cynicism from naysayers might be because of these big AI ambitions for SpaceX and Elon Musk as well, right? Do you think the exuberance, is this a bet on the rocket and satellite business, or is this really 100% about what it wants to do in the AI space?
I wouldn't say cynicism by John. I'd say realistic assessment in a lot of ways. I mean, I think you have to keep in mind that SpaceX, as if rocket launching wasn't an interesting business enough. I mean, AI is a huge component of it. Starlink satellites, which have an enormous role in world events right now, as well as their growing business. People forget that X, formerly known as Twitter, is part of this as well too. It was folded into XAI, but SpaceX is including, visions of data centers in space, is a lot about AI. And AI is the craze, going through the market right now. John and I were both around for the .com bubble, I suspect, and there are certain parallels. Of course, the actual sums involved are much greater, actually, and some of the technology is even more transformational. But, the market moves in cycles, and the only thing surprising is that people keep on being surprised by cycles repeating themselves.
And Mike, to John's other perhaps realistic point in this story has been the governance issue, right? I mean, and Bloomberg has learned that Trump officials actually hold interest in SpaceX or also XAI. What do we know at this point on this matter?
Okay. That goes back to, certainly there's reporting on who owns what, and the Trump administration is in there. Obviously, Elon Musk associations with Donald Trump go beyond mere investment as well. Keep in mind, there was something called Doge not too long ago, which was all of the news here in terms of actually running the government partly. So in terms of Musk control, he's going to control the company. That's how it's going to work. He owns almost 94% of the Class B shares, which have 10 votes per share. He's going to have that 84% plus voting power. There's not going to be a board member that can really take him on or anything of that sort. So, Musk, I think it's important to remember that Musk, he has many detractors, of course, but he also has a lot of fans, too. And he has done something remarkable in putting together this company. And as there's an implicit trust in his leadership by anybody who buys the shares in the company.
Bloomberg's US Deals editor Michael Haidi there, and our senior editor for Markets, John Authers. And Bloomberg has learned that DeepSeek is nearing a $7.4 billion fundraising deal backed by investors including Tencent and CATL in one of China's largest startup financings. Sources say founder Liang Wenfeng has personally contributed almost $3 billion, with outside investors adding the remaining 4.4. DeepSeek says it will prioritize breakthrough AI research with the goal of achieving artificial general intelligence. Shery.
Right, Heidi, and still to come on the Asia trade, U.S. crude prices slip as the State Department says Israel and Lebanon have agreed to implement a ceasefire. All the details next. This is Bloomberg.
The negotiation itself has gone very well, actually. Very well.
Mr. President.
It could happen. I mean, if it happens, and it might not happen, who knows? But if it happens, it could happen like over the weekend.
President Trump saying negotiations with Iran are positive and a deal could happen this weekend. And of course, we do have that latest development when it comes to the announcement by the U.S. State Department of a ceasefire being agreed upon when it comes to Israel and Lebanon to implement that ceasefire, as we've had these tensions with Hezbollah and the conflict in that part of the Middle East as being really a troublesome hurdle to achieving that broader ceasefire extension. And we have seen that sigh of relief when it comes to crude prices, because after a 3-day gain mostly being held in the overnight session, we're now seeing WTI down by 0.7% there. The announcement saying that the ceasefire is being contingent on a complete cessation of Hezbollah fire, amongst other critical elements as well. Chicago Nikkei futures looking like this as we head into the open in about 45 minutes time, and S&P futures falling a little bit behind too. Joining us now is our Bloomberg politics editor Remy Verghese. And Remy, tell us about the latest developments. We know that this was sort of one of the core, at least short-term issues preventing a broader agreement between the US and Iran.
Yes, absolutely. But I should caution that there is a major party that has yet to say anything about this deal or agreement that was announced by the State Department, and that's Iran. So, of course, this would be good news. Iran did not want this widening strikes from Israel on Lebanon, the widening ground invasion of Lebanon. But again, as with anything with Iran, we have to wait and see what Iran has to say about this deal that was announced by the U.S. State Department. It's unclear, what provisions this agreement will have for Iran to adhere to. But yes, it has been a sticking point. Israel had stepped up these attacks in Lebanon, so this could theoretically be a good move. But we'll have to wait and see what the Iran leadership has to say about this.
In the meantime, we're seeing domestic pressure really continuing to compound on President Trump, right, with the Republican-led House voting to stop the Iran war. So there's not much support there when he's looking internally.
Yes, to be clear, the House vote today was pretty important, but it didn't end the military action in Iran. And of course, the Senate would have to vote on this measure, and then the president could theoretically veto this measure. But as a symbolic move, it's really a powerful one. Here you have members of Trump's own party crossing the aisle, risking his anger to vote with Democrats. This is the first time Democrats got enough Republican votes to vote against the war. And it shows that Republicans are getting increasingly worried about the prospect of their holding on to congressional control in the midterm elections. I mean, the war is increasingly unpopular. You see polls showing that Americans are saying we shouldn't have gone to war with Iran, and Republicans are feeling the heat from their constituents.
Roman, when it comes to the potential reopening of the Strait of Hormuz, we haven't seen much progress, right? Are we getting indications that the White House has any sort of alternative plan to be able to get vessels through?
Yes, our colleagues have actually reported that U.S. forces are quietly helping tankers navigate the strait by having them turn off their transponders and sticking close to the southern shore. And this is in contrast to this idea of, openly challenging Iran, right? It's more of a quiet coordination. But still, they are taking self-defense strikes. They are still retaliating when fired upon. And we are not seeing traffic through the strait as it were, before the war. I mean, they are quietly helping some of these tankers, but for this critical waterway, traffic is nowhere near where it could have been or should be.
Bloomberg politics editor Miva Geyser in Sacramento with the latest. More ahead on the Asia trade. This is Bloomberg.
Time for morning calls ahead of the Asia trading day. Bank of America CEO Brian Moynihan says AI and tech spending is paying for itself. Moynihan says the massive amount of capacity building in anticipation of demand is stimulating the economy. Moynihan spoke to us exclusively about how markets are digesting the surge in AI spending.
Well, it's absorbed it smoothly so far, and the debate will be whether at some point the revenue and the earnings multiples and the cash flow multiples all have to come in sync. And right now you're in that phase where there's a mass amount of capacity building anticipated of demand. And so when you look at it, one of the ways that we think about is we are a buyer of these services, and a big buyer. $13 billion in technology a year, $250 million this year in 26 on AI-related spending. And so the question is, what's the affordability of that?
DoubleLine portfolio manager Robert Cohen says the AI debt will almost certainly reach bubble levels eventually. Cohen told the Bloomberg Global Credit Forum the chances are high given the history of heavy investments in areas like railroads and the internet. He says money managers should focus on companies with strong balance sheets and investments with strong projections.
Credit bubble would be credits that are unable to pay back the debt, and it seems pretty obvious at issuance. So we saw that in energy, where there were bonds that just you knew they couldn't pay them back, and they defaulted right away. So credit instruments that require a lot of growth, I wouldn't call a bubble, but I think that credit that basically is doomed is a sign of a bubble. We're not there yet.
Right, as the Iran war drags on, but AI optimism grows, there are some big winners and losers in markets. For more, let's bring in Bloomberg's Anthony Stevens for the setup into Asian trading. And Anthony, I can see in your notes this morning, the Iran war is a hammer forcing markets apart. Technological path dependency is a chisel. For a note at 6 a.m. in the morning sounds rather poetic. So explain to us your rationale here.
Look, we have a lot of macro tension here. The U.S., the tariff was just the latest part of this geopolitical narrative, that keeps pressing on globalization, right? And that is pressuring EM markets into winners and losers. So the people that have tech are doing really well, and the people that don't have tech in a very deep tech semiconductor kind of way are struggling. And we saw more of that overnight. Amidst the downturn in the S&P and the NASDAQ, you saw the semiconductor index was still up. Now that gets a bit challenged now that Broadcom has reported and is trading down. What was interesting in the Broadcom numbers, though, is people expect these companies to not only beat, but guide very strongly. So Broadcom beat, but, its guidance was a little bit more sedate than what you've been hearing out of Jensen Huang at Computex, and the stock is trading lower. So you see how much pressure is on the technology narrative to keep equity markets stronger. Now, the FX markets and fixed income markets have been a little bit more rational. For example, in the FX markets, you're seeing emerging market FX struggling quite a bit, aside from the commodity exporters. So this winners and losers kind of dichotomy is coming into Asia today as Korea comes back. It'll be very interesting to see how Korea trades the Broadcom results. China and Taiwan were very strong yesterday, so let's see whether they can keep that momentum going. But we saw a lot of weakness in India and Indonesia. These kind of markets, we really have to keep an eye on people forced selling.
You talk about the bifurcation being in some of these markets almost to the point of being nonsensical, right? Do we expect the trends to continue?
Look, I think it's really dependent on the war being done, right? Like there is a big unwind that can happen on the underperforming markets if the war conclusively finishes. But as you guys cover, relentlessly day in, day out, there is a lot of back and forth without any resolution. And the longer it drags on, the more the pressure grows on these emerging market economies that don't have semiconductors. So, for example, India have made a massive concession to foreign investment yesterday, talking about cutting taxes on bond investments. These are the kind of concessions markets in Asia will have to make to keep foreign inflow if they don't have semiconductors. So for now, those trends seem to be mega trends until this war is conclusively concluded.
Bloomberg's market reporter Anthony Stevens there with the latest. More ahead here on the Asia Trade. This is Bloomberg.
Haidi, our top story today, and perhaps one of the biggest stories of this era, SpaceX filing for $75 billion IPO, right? I mean, we're talking about how historical this is because it could be the largest ever, right? More than double the size of Saudi Aramco's record $29 billion IPO. The IPO could be expected as soon as June 12, but it's not just about the size of the IPO. Ethics experts describing this offering as having no historical analog. We're talking about not just unprecedented size, but the deep government dependence that this company has, right? I mean, remember, Washington is one of its most important clients for SpaceX that has secured $4 billion in federal transactions in 2025 already. So, Haidi, this is definitely one to watch, and especially when it comes to the sequencing of more IPOs to come, potentially Anthropic and OpenAI as well, in this era where artificial intelligence FOMO is just at its peak.
And SpaceX is such a good example of that FOMO, right? This is a company, as it builds excitement for this offering, is positioning itself as an AI company, as an AI bet. Never mind its rocket launches, never mind its satellite business, right? This is all about AI being front and center as we continue to see the excitement being built for the likes of Anthropic, OpenAI, Google's fundraise as well, right? But you're talking about the fact that this is really unprecedented. This decision to offer shares at that fixed price ahead of order taking is almost unheard of for sizable US IPOs, unlike what we see perhaps in Europe and Asia as well. So for many reasons, as you point out, SpaceX is looking to really make this sort of unprecedented splash in these markets. There are also these wider questions as to how much of this is going to be really a test for broader markets, already so bifurcated, already so concentrated in these AI chip and tech related names. What does it mean for the sort of laggards and the depth of liquidity and investor confidence that we see in these markets? On the other side of the coin, we also have the continuing geopolitical developments, right? We're looking at that softening in crude prices, the US announcing that Israel-Lebanon ceasefire. Our reporter earlier pointed out a very good missing factor here, which is, of course, what Iran thinks about this. We know that that's a key point of contention in these broader ceasefire talks between the US and Iran. Let's bring in for the market view Sylvia Jablonski, CIO at Defiance ETF. Sylvia, really great to have you with us at such a hectic time for market participants. Let's start off with the mega IPOs with SpaceX. How do you view this offering for all of its ways that is quite unconventional, I should say, coming at a time where the valuations for a lot of these companies are just so hefty?
All right, and so first, thank you for having me here. I think that the SpaceX IPO is going to be one of the most exciting IPOs in history. There are so many investors that are just, kind of chomping at the bit to get exposure and access to the shares and trying to figure out, how they're going to do it, whether it's going to be through an ETF wrapper, whether it's going to be, buying the stock itself once it IPOs. And I just think that the interest is massive. The SpaceX IPO is interesting on a lot of levels. I think first it shows that there is this huge focus on the future of AI, and that will be, kind of space connectivity AI, space compute, different ways to have, connectivity outside of what we have here on Earth, essentially. So, lower latency, lower energy use, things like this. It could be a potential AI company, as you said in your intro there. And I think the second thing is just, how much excitement there is about some of the IPOs lately. Like Quantinuum is another exciting one. It's $12 billion. It, kind of is much smaller than SpaceX, but investors are very much investing in the next generation of computing. And I think, these quantum companies, these space companies are just what that brings.
Are there enough pieces of the pie for everyone at this point, or are you going to see this kind of desperation to be first to market suck up a lot of the oxygen?
I think both. I think there'll be a lot of competition and a lot of, who's getting first to market. But I think the opportunities are also vast, right? AI just started with this ChatGPT moment, and a year or so ago, that's what AI was to everyone, and then it kind of broadened out to chatbots, and now it's a much different thing, right? We're talking now about defense AI. We're talking about the power and infrastructure of AI, the cooling, the photonics aspect of it, memory. I just think that the moat of AI is so massive right now that investors have so many different angles by which they can play this trade and get exposure to it.
Sylvia, but at the end of the day, despite the FOMO and the exuberance around artificial intelligence, we're talking about a huge flood of stock supply coming to market. What will be the broader repercussions for market levels, especially when you take it from the passive investor side of things and take a look at these big ETFs and how some very few companies are dominating the broader market?
Right. Well, I do think that you'll have this bifurcation of stocks in the market if that happens, and if you do get this congestion problem. But again, I just think that some of the companies that are IPOing and coming to the market offer something a little bit different than the others that we're already familiar with. There are a lot of newer names in AI. For example, I could name like POEL or Iron, which used to be a bit mining company. They're involved in AI infrastructure. There's so many kind of small cap companies that are actually starting to generate revenues and have come to market and gained investor attention, and they're actually doing quite well. So I do think that the runway for some of these stocks continues to be there, potentially there anyway, as AI grows.
Do you have to be more concerned about diversifying in this environment, and how would you do that?
Yeah, I mean, I think it's always smart to diversify, right? We always say that, you kind of want to have different alternatives in your portfolio. And I think that there are ways of doing that. So if investors feel that they're starting to get very heavily allocated to, specific AI companies, for example, or just tech stocks, they could look at things like XMAG and kind of take out the exposure of the Mag 7 and get the broader diversity of the S&P 500. So there's certainly ways to diversify that. I think, investors are going to start looking at companies that will actually benefit from AI. So, this moat type of concept, right? I do think that there are ways to diversify by seeing where AI will play out in different and broader sectors that are not necessarily technology based.
And you point out this is not just a software story for AI anymore, or even a chip story. It's an energy supply story. Is that one of the biggest risks, do you think?
Yeah, I do. I think that's a big bottleneck, and I think it's why you're seeing some of these other companies, doing very well. A lot of the top energy companies, for example, the photonics companies, the laser, the Lumentum's, Coherence, the poets of the universe are doing quite well, because I think there's this thought that, as we continue to consume energy and we're trying to build out these big AI data centers and workloads, some of the smaller companies that are doing it and moving data in different ways will benefit from that.
Sylvia, always great to chat with you. Sylvia Jablonski, CIO at Defiance ETFs. The latest from the corporate front now, and Bill Ackman is looking to sell his stake in Universal Music Group just days after the world's largest music label rejected his takeover bid. The sale would raise around $1.7 billion for Pershing Square at the top of a marketed range. A source says Ackman is expecting a profit on the transaction of more than $600 million. Broadcom shares fell in extended trade after the company delivered a disappointing forecast for AI chip revenue. It sees third quarter AI sales of $16 billion, where analysts had expected $17 billion on average. The full year forecast of $56 billion was also shy of estimates. Broadcom says it's making progress with AI customers, including Alphabet, Anthropic, and Meta. More to come here on the Asia Trade. This is Bloomberg.
Bank of Japan Governor Kazuo Ueda signaling a strong chance of a rate hike this month if inflation risks outweigh the potential economic hit from the Middle East crisis. For more, let's bring in Tokyo economy and government reporter Erika Yokoyama. Erika, so are we finally on June 16th going to get that much anticipated BOJ move?
Yeah, correct. So Ueda's speech yesterday has a lot of implication. It was, first of all, more hawkish than many had expected. That market had already largely priced in the June rate hike. So his speech yesterday just strengthened that expectation. Throughout the 45-minute speech and Q&A session followed up, Ueda dropped lots of hints suggesting the preference for raising rates. Most notably, as you said, he suggested that even if Middle East situation remains uncertain, the board member needs to discuss a pro and con of rate hike if inflation risks are bigger than the downside risk to growth. And then he even said that inflation remains the bigger concerns for now. So taken together, that sounds very much like the central banks preparing the ground for the rate hike in about 2 weeks.
So very hawkish comments coming from the BOJ governor, and yet the Japanese yen just a hair away from 160. 159.94 is the level. Does a BOJ rate hike at this point matter at all for the currency trend?
Yeah, it's a tricky question, but for yesterday's speech, the market, as I said, already largely priced in a rate hike. In that sense, Ueda just prevented a negative surprise. Like if he had shown even a slight hesitation about raising interest rates in June, the yen could have weakened past 161 or 62 against the dollar level. So he didn't have that, which was kind of good things. But at the same time, it's also highlighting highlighted the reality that a single BOJ rate hike is probably not enough to send the yen to safer zone. That means Ueda may have to continue delivering even more hawkish guidance if policymaker wants monetary policy to provide support for the currency. Otherwise, pressure could once again go back to the government after it spent the record over 11 trillion yen on market intervention in the past months.
And already at this time, we saw the $19 billion supplementary budget being approved by the government. Very important, this whole idea of fiscal responsibility when it comes to the JGB markets as well.
Yeah, correct. But luckily, the market reaction was pretty calm yesterday because, the government had enough telegraphed the package well in advance. And, at the same time, investors seems to be reassured by Takaichi's preach not to add the bond on current basis. But, still this Takaichi hasn't really escaped from the physical scrutiny by the market yet. We are expecting a series of sensitive debates soon, including consumption tax cut, defense spending, or Honebuto no Hoshin. It's an economic policy blueprint for the next year. So each of those events can have potential implication for the finance and physical market. Bond markets will keep testing the credibility and sustainability of Takaichi's fiscal strategy. So yeah, right. Takaichi may have passed the first test, but the real challenges is soon to come.
Yeah, Erika Yokoyama there, our Tokyo economy and government reporter. Let's actually delve a little bit deeper into Japanese markets because we were talking about the yen trading at around that 160 level against the U.S. dollar, despite, of course, those hawkish comments coming from Governor Ueda. For more, let's bring in our chief correspondent for FX and rates in Asia, Ruth Carson. Ruth, so the yen still very close to that what we consider or what traders consider intervention zone 160 level. Why are we seeing so much yen selling at a time when we're also getting a hawkish rhetoric coming from the governor?
Absolutely. And it does show that there is judgment on the yen there by the macro traders. We have seen the yen actually pierce through the 160 level against the dollar in the New York trading session. We are, as you pointed out, firmly in intervention risk territory here. And if you look at, for example, options markets, they're signaling more weakness ahead. Now, a big part of this does come down to factors beyond Japan's control. The Iran conflict is still raging. We know that oil prices, even though they've sort of tapered down a bit, they have been rising all week on those headlines. And we know that Japan is a big oil importer, energy importing nation. With all those pressures there, the BOJ still seen behind the curve by many traders out there. Yes, the yen has squarely returned to being a favorite short.
What are options traders then signaling when it comes to what's next for the yen, right? Is there a view that the weakness has gone too far? Are they willing to push the short selling even further?
Yeah, so we have a very good terminal function called FXFM Go on the terminal, and it actually shows you where investors, options investors and traders see a particular currency heading. And they are assigning a more than 30% chance of dollar yen trading at 163 by the end of June. So we are talking about further upside in dollar yen, further yen weakness until we see some resolution of some sort. And yes, the BOJ would have to hike.
Ruth, every time I speak to any government official, they refuse to talk about any specific Japanese yen levels. Not 150, not 160, not 160 anything. And yet, when it comes to traders, we do look at the 160 threshold very, very carefully. What can we expect in terms of potentially authorities stepping back into the markets?
I think it's important to remember that markets do love big round numbers. And it wasn't that long ago, in late April, when we saw dollar yen hit 160 and when intervention started happening. So for a lot of investors and traders out there who are already short on the yen, they are looking at those levels, probably putting on some hedges in the option space and derivative space. But absolutely, 160 was the line in the sand. Now, people can debate whether it is still there. It could be 162. But definitely, as soon as dollar yen crosses that 160 mark, everyone is on alert.
Our chief correspondent for FX rates in Asia, Ruth Carson. We shall remain on alert then. Still ahead on the Asia trade, South Korean markets are set to reopen after local elections. Traders continuing to navigate fears of an AI bubble. We'll get a preview next. This is Bloomberg.
South Korea markets will reopen in a few minutes after a holiday for local elections. This comes as investors mull the risks of an AI bubble after the Kospi scorching run of gains. And also overnight, Broadcom's disappointing outlook. Let's bring in our Asia equities reporter, Yu-Kyung Lee. Yu-Kyung, of course, we had a little bit of a stalling when it comes to Wall Street, including with software stocks underperforming. What can we expect at the reopen in Korea today?
Sure. Good morning. So South Korean market reopened after a local governor election yesterday. We are expecting investors to pay closer attention to the Broadcom's earnings result, which reported weaker than expected revenue forecast. So that's definitely going to be at play with the AI trades within South Korean market. We saw some weakness during the pre-trading with Samsung and SK Hynes, but because during the past three sessions, South Korea's Kospi has been gaining. Today might be a good day to take a breather and see where things go, especially given that the Broadcom has projected weaker than expected revenue. That's one thing that investors are watching. Another is that the biggest event later this week will be the Korea visit by the NVIDIA CEO Jensen Huang. And when NVIDIA CEO Jensen Huang visited last year, there were quite a lot of impact on the local stock market from the meme stock related to what Jensen Huang had for the dinner and all the local executive that South Korea he had met in South Korea during his visit. So this time his visit is expected to be longer than last time when he was here in October. So during the upcoming 4-day visit, we are expecting some reactions in the South Korean stock market as NVIDIA CEO Jensen Huang meets with local executive and startup investors.
We were talking yesterday about the rotation out of Korean equities, especially when it comes to overseas buyers, right? Selling and then rotating into Japan instead. We have a story talking about today the opportunity for Korean companies to perhaps exceed Japanese companies when it comes to their profit forecast. So is there a view in terms of which of these markets is going to win out more when it comes to the AI trade?
Yeah, that's a really interesting question. Yes, definitely foreign investors have been piling into Japan while they were selling some of the Korean stocks. But remember that most of the selling by the foreign investors in Korean stock have been focused on the Samsung and SK Hynes, and that's because they've probably been hitting the fund's limit on the single stock. So they've been reducing their position on the Samsung and SK Hynes in their portfolio while piling into Japan. And interestingly, South Korean corporates are expected to report bigger earnings than Japanese counterpart for the first time since 2008. Now, a lot of investors, at least in Seoul, believe that this could mean that further re-rating could be possible for the Korean equity market because the compared to the earnings, South Korean stocks still remain pretty cheap. And this comes while the earnings momentum among the Japanese automakers has been waning, whereas the AI stocks, the AI companies such as Samsung and SK Hynes have been seeing the growing earnings forecast, especially this year and next year. So given the valuation gap, there could be more room for South Korean equity market to re-rate compared to Japan.
Yu-Kyung, what about the local elections yesterday in South Korea? Are there any broader implications for markets, given that we might see more support for President Lee Jae-myung at a time that already it seems inflation is running rampant? We could see a shift from the BOK as well?
So this was not the bigger parliamentary or national level election. This was a local governor election, and it looks like the ruling party is going to have a landslide victory in the most of the regions. So we're not expecting a huge change in the market related or financial reform related policy from the current administration. So investors would probably be expecting the continued support in the corporate governance reform front and other market friendly policies that the current administration is having. So we're not really expecting a huge change after this local governor election.
Bloomberg Asia Equities reporter Yu Kyung Lee there. Let's get you a look at, we are, just about 6 minutes away from the start of cash trading here in Australia. Also, the KOSPI coming back online after being closed from trading in yesterday's session. So a bit of catch up when it comes to the news flow, particularly pertaining to the slide in Broadcom, but of course the exuberance over SpaceX's pricing as well, seeking that $75 billion in the record IPO to try and fund those AI as well as space launch ambitions. We are seeing broad downside, though, clouded really by some of these factors, including the uncertainty over the Middle East continues despite the announcement of a ceasefire between Israel and Lebanon. We are seeing Sydney futures off by about 0.6%. Shery, broadly quite a muted session that we're expecting, despite, of course, a lot going on in the tech space.
Yeah, we continue to watch, of course, futures trading at the moment, still pointing to some downside, given, of course, all of the headlines around Iran. And in the overnight session, we also had seen the Fed Beige Book pointing to inflation pressures across most districts. Market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens with oil a little bit lower, Haidi, given that we just heard from the U.S. that Israel and Lebanon have agreed to a ceasefire. But it's really about these two narratives in the markets, right? I mean, it's all about the Iran war at the same time as we're seeing this exuberance around artificial intelligence and the flurry of IPOs that we can expect, starting with SpaceX.
The absolute excitement, exuberance, if you will, when it comes to SpaceX, the sort of unusual qualities of this offering as well. At the same time, we've got, as you say, the Google fundraise, Anthropic, OpenAI. We've got news when it comes to DeepSeek as well. At the same time, some concerns stemming from the Broadcom story that we saw overnight. A lot for investors to be grappling with.
Yeah, we saw those software stocks also underperforming in the overnight session. So we'll see what the repercussions are here in the Asian session. But of course, we're following everything around the tech sector, also around anything related to energy. We are seeing a little bit of downside early in the Asia session here in Japan, with the Nikkei dropping 0.8% after gaining ground in the previous session. The Japanese yen still very close to that 160 level against the dollar. And this is what we're watching, right? Because we had perhaps the clearest sign yet of a June rate hike to come from the Bank of Japan Governor Ueda, saying that inflation risks right now appear larger than growth risks related to the crisis in the Middle East. And yet, the Japanese yen very close to what a lot of traders have considered intervention zone. The risk could be there as we approach that threshold of 160. Now, we've been watching JGBs very closely as well, because yields have been at multi-year highs, and we have been watching anything related to fiscal accountability here in Japan. And we have now seen Japan approve a $19 billion supplementary budget. So this narrative will continue across markets as well. Take a look at how South Korea is coming online. We had them closed for local elections yesterday. It seems that President Lee is going to get more support and a boost from the elections outcome. That could perhaps mean his policies could continue for the next 2 years. So anything related to governance, reforms in the markets, we should continue to watch, especially when it comes to tamping down on that huge rise in property prices. That's always an issue in South Korea. The KOSPI right now trading down 1.8%. You can see also weakness in the Korean won, a little bit of strength today. But when we're talking about the 1,500 level against the U.S. dollar, I mean, we're watching this level very closely as those tech plays are under pressure today, Haidi.
And then the other side of the coin is still that ongoing concern over the inflation and the growth question, right? Because yes, we do have a little bit more progress, which is better than no progress, which is kind of that stalemate we've been sitting at when it comes to the US and Iran. We can see that being played out when it comes to oil prices in particular, right? As we see that decline in WTI after 3 days of gains slipping after we heard the US saying Israel and Lebanon agreeing to a ceasefire. We haven't heard Iran's take on this yet at all, which, you know, if there is a cohesive agreement, that removes a pretty big sticking point in terms of these ongoing talks for a broader ceasefire between Tehran and Washington, which we've seen no progress on over the past few days. President Trump still saying that we could see a deal potentially by this weekend. So we continue to watch that as one factor, particularly when it comes to that broader inflation outlook. For Australia, we are seeing downside of 0.7%, really another session of losses. We had these rate-sensitive sectors, banking, property shares rating the most in the last few trading sessions, particularly when we have an RBA board member warning about the longer-term inflation expectations having edged higher. We're also hearing from RBA Governor Bullock later today when she appears at a Senate committee hearing. Shery.
Heidi, let's bring in Jung-In to discuss all of this. He's the CEO of Fibonacci Asset Management. Really good to have you back. So, I mean, these two narratives around any headline concerning the Iran war and, of course, the exuberance around artificial intelligence. What's more important right now at a time when we're also seeing this massive fundraising, IPOs to come as well? What could be more impactful for market trading in the next few weeks?
I think in terms of the SpaceX IPO, because of the pure size of the deal, it will have some ripple effects. When we have a mega IPO like this, we usually see some liquidity get drawn down and focus on these IPO names. So overall, the index level will be sustained or go up. However, if you look at the individual stocks for the sectors that's closely related to this stock, we might see some profit taking happening before the IPO.
Yeah, so how important is it that you're very selective now when it comes to the AI boat at a time when it's not just SpaceX, but we might get a flurry of Anthropic, OpenAI as well listing?
Yeah, I mean, I think we passed the phase where making money from the AI theme was easy when you just buy and hold the major names. However, going forward, we have to be more careful when it comes to stock selection, because the investor will start to demand to see some earnings. And obviously, without the power of the cash flow coming in, without the earnings keep beating the expectation, the exuberance can quickly evaporate. So we will see some wide dispersion among the winners and losers in the AI theme. That means stock selection becomes more important from now.
Where do you find those opportunities that haven't been picked from, you know, the category of being lower hanging fruit?
So if you look at South Korea stock, some of the AI-related stocks like Samsung Electromechanics, their P ratio is over 100. And some suppliers, their P ratio is over 200, which does not seem so sustainable. However, for the past few months, investors didn't really care, because as long as they saw the momentum, as long as they saw the prospect, the narrative drove the prices. However, going forward, it's not going to be able to set itself. The companies will have to show that the forward earnings will be there, and they will have to continue to meet the expectation, which is growing higher and higher. Right now, the single most important risk factor is the expectation is too high.
Are expectations right-sized when it comes to physical AI? Because you've talked about perhaps the next part of this opportunity are sectors like robotics.
Yes, so robotics is where it is a bridge where AI becomes more interactive with the daily lives. And right now, if you look at the actions of Jensen Huang, he's obviously visiting Taiwan and Korea, and he's meeting some interesting companies like LG Electronics or Naver. I think what he is looking for is that he also believes that the next wave of AI is robotics, not the semiconductor. I mean, of course, we have continued rally for the semiconductor. However, I think overall, we'll be looking at how robotics start to infiltrate our daily life. And it's not just having humanoids in every household, it's also about automation of every factories in the world. And that's going to create a meaningful cash flow in the future.
Jung-In, it's interesting these days when we talk about everything that's happening with artificial intelligence and the exuberance there, that we're talking less and less, it seems, about monetary policy in the Federal Reserve. Overnight, we have pretty strong data, right? I mean, ISM services activity accelerating. We saw new orders improving. We saw the strongest private payroll gain since 2025 January. What are right now the implications of a potentially more hawkish Fed, given now that we're thinking more of rate hikes to come instead of rate cuts? What's the significance for Asian markets?
So if you look at the ISM data, it's promising. However, the narrative in the Fed is primarily driven by the inflation. And Feds are not in a rush. And any central bank in the world is not in the rush right now, because the inflation is there and is very apparent in the CPI. And there's a wide expectation that even if we have a U.S. Iran peace deal today, the oil price will probably stay at an elevated level for quite some time. However, I think there will be a deal eventually. And when the deal happens, we will start to see the energy prices come down. And that will put the rate cut back into the table in the fourth quarter. So right now we are concerned that a BOJ or a Fed might hike the rate instead of cut it. However, I think going forward in the second half, toward the end of the year, the narrative will reverse. We'll be talking about more gradual rate cut instead of the hike. And that's my expectation. And I think we should be prepared for the rate coming down gradually rather than being worried about rate hike right now.
Jung-In, really good to have you with us, CEO at Fibonacci Asset Management. And of course, we're still talking about artificial intelligence again, because if we check the markets right now and what's moving across South Korea, it's all to do with the tech sector, right? I mean, we have been watching SK Hynix because earlier this week we heard that they plan to double their memory chip capacity over the coming half decade in order to help ease a global shortage of this component of this AI boom. At the same time, in the overnight session, we had downside pressure. So we're seeing a little bit of that repercussion there with SK Hynix and Samsung Electronics down more than 2.5%. For example, Broadcom falling after issuing guidance that failed to satisfy investors. And we know that LG Electronics Korea Circuit, of course, are suppliers of Broadcom. So we're following these stocks in today's session. More ahead on the Asia Trade. This is Bloomberg. SpaceX has officially filed for its IPO, aiming to raise $75 billion in the biggest listing ever. The share sale set for June 11th should open the door to more mega IPOs and propel CEO Elon Musk closer to becoming the world's first trillionaire. Let's get more with Bloomberg's U.S. Deals editor Michael Hythe, really breaking a lot of historic metrics at this point. What were the key takeaways from the filing?
Oh, sure. It's a big week for big IPOs. That's for sure. The key takeaway, I think, is the filing, which is SpaceX actually launching the marketing of its shares, confirms a lot of what's been previously reported. The key numbers are just impressive. They have to be repeated. A total raise of $75 billion. That's more than twice as big as any other IPO previously, period. And only 4 other IPOs ever topped more than $20 billion worldwide. So this is a big deal. That puts SpaceX at a valuation of $1.8 trillion. And back to superlatives, that's bigger than all but 6 of the companies in the S&P 500 now. And that includes Tesla, Musk's other company at this point, right? And one really interesting point of the filing is that it confirms this notion that breaking from tradition on Wall Street, SpaceX is doing something almost unheard of for a large IPO. They are setting a fixed price for the listing so that you're going to buy a share, it's going to be $135 per share. There's none of this setting of a range to test the market and see who wants to buy how many shares for what amount. That's the kind of thing that's done with really small IPOs sometimes. And things like SPACs, the special purpose acquisition companies that are, $10 a share, and that's it. So this is going to be interesting. The marketing of it is going to be interesting as well, and to see how it plays out.
So many aspects of this is fascinating and unprecedented, right? Will Elon Musk still be controlling the company?
Oh, you betcha. 100, not 100%, but 84% plus. He will have 84.4% of the voting power of the shareholder voting power, which means that comes from his ownership of, I think it's 94% of the Class B shares in the company, which carry 10 votes apiece. So anyone buying shares in SpaceX is going to have to be pretty comfortable with all the decisions made by Elon Musk and his leadership. He will not be able to have any sort of shareholder rebellion of any sort because he's the one in control. And obviously some people, he has as many fans as detractors. So, but buying into the IPO is going to be buying into a trust in Elon.
That in itself really raises eyebrows, right? I mean, this whole issue of governance, this whole issue of how dependent it is, codependent with the U.S. government as well. At a time when there's so much exuberance that you're seeing the likes of Jamie Dimon pitching it to clients himself.
Oh, yes. I don't think Jamie does a whole lot of retail pitching on anything. He's sort of the C-suite guy, right? The C-suite guy. So he's having this meeting tomorrow, as we've reported. It's going to be simulcast to some, 90 JPMorgan locations throughout the United States, in which he will be talking to their wealthy clients and pitching SpaceX to them directly and answering questions. It's with some other executives at JPMorgan. JPMorgan is one of the 5 banks on the top line of the IPO. So they're very much involved. And Jamie is going to test his sales skills.
Like I said, unprecedented times in so many ways. Bloomberg's US deals editor Michael Haida there with us. Meanwhile, DeepSeek is close to finalising a deal to raise about $7.4 billion from investors, including Tencent. Its own founder, as well, is pitching in quite a bit. It's a milestone for Chinese AI financing. Anthony's back with more on DeepSeek, the setup for China markets. Let's not forget about China's AI ambitions, right? With all of the exuberance over what's going on in the US IPO market, we're seeing significant raises being done in China too.
Right, it's the parallel AI ecosystem, right? And while it is smaller and less exuberant from a valuation perspective, capital raising continues to be another theme there. So DeepSeek, they're raising $7.4 billion, valuation of 59, something like this. And of the 50 billion yuan, the founder is putting in 20 billion yuan. So that's quite a big statement of intent on that front. What's also interesting about the capital raise is they remain very focused on general AI. This is a founding theme of this company, and they are pushing monetization further down the line. It's interesting also to me that Tencent has joined this capital raise, coming so shortly after WeChat included AI within its offering. So it's a very interesting little tussle there. It comes also on the back of Minimax and Zippo filing for Starboard IPOs. So this space is rushing to raise capital while it still can, and while the Chinese kind of AI platforms carve out a lower cost space than the US platforms.
I mean, they're only raising $7 billion. Not that the likes of you and me will ever see even $1 billion in our lifetimes, but I mean, compared to the incredible $100 billion valuations of all of these other companies, SpaceX, Anthropic, OpenAI, for example, this seems pretty restrained.
Right, and it comes back to this monetization angle, right? So if you see Open Router's rankings of market share, DeepSeek is right up there, right? They have 3 or 4 of the top 10 models by market share, people using these models. But on the pricing side, even though token pricing has been up around 85% by the token index this year, most of those gains have been driven by American AI models. So to give you just a quick stat, right, DeepSeek's most advanced model charges about 18 US cents per million tokens. The equivalent number for Claude is $4. So that's a vast difference in pricing power, and also a vast difference in pricing ambition. China's AI ambition is around adoption, not profitability. It's a very different business model, and the cash flow is pushed out way down the line. Last thing is, obviously, the technological advancement of the two models are very different. So if you see DeepSeek's rankings on AI intelligence index, it's about 10 points lower than Claude. So China is carving a niche out in the more cost-effective side of AI, but that demands a much lower valuation premium.
That's such an interesting comparison in terms of profitability versus more wide-scale adoption, right? The Western market or the Western ecosystem, given we have this huge pipeline of mega IPOs, given that we have such a bifurcation as you've drawn attention to in broader markets, are we setting ourselves up for that inevitability of the way down?
Yeah, look, I think it's very interesting, and it really depends on the Chinese consumer market turning the corner, right? The way the Chinese have invested in AI is basically to supercharge their consumer economy and create a new range of service economy plays. So, like, this one-person company trend that is kicking off in Shenzhen. If those trends kick off, China's strategy will pay off. On the other hand, the strength of the U.S. capital market, as your guest alluded to before, that is the counterpoint. America can raise so much more money to throw into technological development. So China will need its consumer to turn the tables to play catch up.
Anthony Stevens there, our Bloomberg Markets reporter with the latest on DeepSeek and the capital markets in China. More ahead on the Asia trade. This is Bloomberg.
The negotiation itself has gone very well, actually. Very well.
Mr. President.
It could happen. I mean, if it happens, and it might not happen, who knows? But if it happens, it could happen like over the weekend.
Well, President Trump saying negotiations with Iran are positive. A deal could happen this weekend. In the meantime, we have seen a little bit of relief across energy markets. This really on account of the U.S., the State Department's announcement that Israel and Lebanon have agreed to implement a ceasefire contingent on the complete cessation of Hezbollah fire. Brent crude at the moment off by about 0.6%. We are seeing that broad sort of lack of conviction across Asia today. Some of the Broadcom, that slide in the overnight session on the AI chip outlook is disappointing investors. A little bit of risk aversion in this part of the world, with US futures also pointed lower. Well, let's talk more about the agreement between Israel and Lebanon to implement that ceasefire if Hezbollah also stops hostilities. It comes days after a tense call between President Trump and Benjamin Netanyahu as Washington pushes to keep truce talks with Iran on track. Joining us now is Bloomberg editor Michael Heath. The president, in fact, did confirm that he did indeed swear at Netanyahu, and he was, quote, a little bit perturbed at the whole situation. This is clearly a positive step. We haven't heard from Iran, and we know that this is a real key sticking point.
Yeah, I mean, Iran had basically said that it would suspend talks if this conflict continued, and that we had the foreign minister speak as well, all reported by Iranian state news agencies, saying that it was sort of a deal breaker almost. But so this is this is good news. The difficulty is that obviously Lebanon doesn't control its own territory. I mean, we're talking about Hezbollah here, which is sort of one of the biggest non-state actors in the world, very, very significant, and with a lot of firepower. So the question is, President Trump also said that he'd spoken to some senior Hezbollah officials. So the question is, if Hezbollah, whether they do keep firing or not. If they don't, then presumably this does go ahead, because there are Lebanese officials obviously who are go-betweens with Hezbollah, and as long as they can keep Hezbollah quiet, then Israel is likely to back off as well. But if the shooting continues, then all bets are off again. So we really just have to see what happens on the ground. It's a step in the right direction, but there's just so many little incremental things going on at the moment.
Yeah, we saw with the House vote as well. Clearly, the there's not much popularity for going further with this war domestically within the US and within the Republican Party.
Yeah, I mean, it seems like that some Republicans, I guess, are beginning to break. I mean, it's to sort of put on the record that they don't want anything, this going any further, or to, I guess, express, symbolically their opposition to this going on as well as we head towards those elections. And it's probably only going to grow. I mean, this will drag out. It's not a popular war in the US as well. And it also, I guess, gives a bit of a sense of the administration's sort of growing isolation there compared to some of its allies. Though President Trump is so powerful within the Republican Party, I'm not sure how significant, really it is at the end of the day. But symbolically, it does highlight the unpopularity of the war. Yeah.
There is a view that there's a view that Trump is a lame duck president anyway, given where he is in his tenure, but also coming so close to the midterms, he's obviously contending with a lot of domestic political pressures, both with voters and within his own party. There is that view that maybe Iran is quite okay to just kind of drag things on.
Well, I mean, on one hand, he's a lot about. I mean, he's obviously got quite a considerable ego, so he'd love to, to sort of draw a line under this whole issue of Iran and the nuclear weapon, etc. And he has the capacity to dig himself out of it, probably rhetorically. But, if he does actually want to be remembered as the man who sort of put an end to this risk of Iran having a nuclear weapon, it is going to take time. It is going to take effort and patience. They're not really his stronger suits. But it also is going to take a bit of will. And it may be that they just do have to sit this one out for a bit longer and take some pain. So whether that's his thinking, I mean, he sort of indicated that might be the case. We'll just have to see.
Bloomberg editor Michael Heath there with the latest. More ahead on the Asia trade. This is Bloomberg.
We're seeing broad downside across markets in Asia, with the Kospi and the Nikkei down more than 1%. You can see the ASX 200 also losing as much. Of course, we have lower oil prices, as we just heard from the U.S. that Israel and Lebanon have agreed to a ceasefire. But it's really the broader artificial intelligence narrative that's really fueling markets across Asia, right? Especially when it comes to Japan, to South Korea. In fact, we're now seeing analysis that Kospi companies are forecast to generate about $450 billion of combined net income this fiscal year, which in fact could be slightly higher than for Japanese companies on the topics at around $440 billion of combined net income. A lot to do, of course, with the surge in artificial intelligence build out. We're talking about exports from the likes of Samsung, SK Hynix. On the other hand, you have lots of car makers here in Japan, and we know that the automotive industry, Haidi, has been stalling recently and lagging behind. So you can see, of course, that discrepancy across markets now filtering through, and the haves and have-nots, really that narrative continuing to be emphasized even among economies across Northeast Asia like Japan and South Korea.
We've seen these haves and have-nots when it comes to the broader commodities and metal space as well, right? Quite an interesting session that we're seeing for oil at the moment, given these recent developments, the announcements of from the US of that agreed upon ceasefire between Lebanon and Israel, pulling that oil price, given that we've seen about 3 days of gains there. Gold is up about 0.3% after a previous drop, and we're seeing copper coming off the 3-week high amid these sort of pessimism and uncertainty over what goes on with the war. Let's bring in Daniel Hynes now, who's a senior commodity strategist at ANZ. It's a busy time on the headlines when you come in and you're like, I'm just drained. There's a lot going on.
Yeah, and it's making it difficult for any sort of clear consensus to form around what this means. So that's obviously why you're seeing the markets jump around, headline-driven sort of volatility at the moment. But I mean, there are signs, I think, from our perspective, where we can see some broader trends developing, and I think. When the sort of the conflict enters a more stabilised sort of phase, I think those things will start to emerge, and we'll start to see clearer trends. But at the moment, it's still difficult to really decipher, what is fundamentally driven and what is, I suppose, financially or sentiment driven at the moment.
How nuanced is the outlook for oil? Because is it, in a sense, is it binary? Hormuz either remains shut or is open. It could be open but tolled, or it could be open with free passage. So, what are those kind of models?
Yeah. I don't think it's completely binary. I mean, there'll be certain sort of aspects of whether it's open or not. In terms of open, will Iran maintain some sort of control over it? Will it manage the transits of vessels through? Which countries get priority access, I suppose, will go a long way to determining how the oil market recovers from this. I suspect, there'll be. I mean, our view is that Iran will. The management of the strait has fundamentally changed, I suspect, and their presence will hover over the market for some time to come, and that's going to constrain, I suppose, the strait as a key waterway for oil before, I suppose, those alternate sources are developed more. We've heard about Saudi Arabia and the UAE and the like developing the pipeline network to get around that. But in the meantime, it's going to be a constraining factor, and I think that's probably where we are looking in terms of that medium term outlook. That it's going to be difficult to get back to where we were before the conflict started.
What does the transmission look like right now in terms of time? Like, at what point do we see renewed pressure on domestic oil prices, for example, or prices for a lot of the economies that have already come under pressure in Asia? And on the flip side, how quickly does that recover?
Yeah, I mean, the buffers that we're seeing in the market at the moment, are certainly differing depending on the regions we get. I mean, certainly Asia, has benefited, I think, from China reducing its imports quite significantly. Now, we don't know how they're buffering that domestically, but certainly, the lack of pull from them has alleviated the shortages in the Asian region, and clearly the inventory drawdowns in the US have also benefited from that. But our best guess still is that sort of through August and into September, we'll see that buffer virtually eliminated if all things remain the same as they are at the moment. So we're getting closer, but it's sort of going to be like a sudden appearance, of this rather than a sort of a gradual sort of evolution, even though that's happening in the background. I think markets until then will put up a brave face and say, things are holding up relatively well until they aren't, and then all hell will break loose.
And I assume it's seasonality too, right? We've got to get through the summer before we can take a look at what the shortages look like for oil and for LNG. Yeah, no, that's really critical. I think in the US, the US driver consumes 10% of the world's oil, and we're obviously into the summer driving season there now. The metrics still look like their demand's holding up relatively well, despite $5 a gallon there. They're continuing to drive. So I suspect we'd need much higher prices to really force the demand destruction that we need. But initially, that'll emerge through reduced US crude oil exports. And obviously some of the fuel products that they've been providing to countries like Australia as well. Metals have been really interesting, right? Obviously, so we're seeing a bit of a pullback at the moment, but how much of a squeeze are we expecting for copper and aluminium to continue structurally? Yeah, it's not just the supply side issues, but clearly they've gained in sort of attention just recently. On top of obviously the underlying issues that they've been experiencing, particularly copper, we're seeing obviously the sulfuric acid situation really place pressure on countries like South America and Africa. But it's the combination with a brighter outlook. And I think equity markets have been really driven by this renewed sort of optimism around AI and the boom that brings on infrastructure. And metals are, I suppose, being reborn in a little sense. There was some pressure on them because of the potential impact on the global economy from this conflict. But now I think
they're seeing through that and the benefits that the AI boom and the data center build out will bring them, is coming to the fore now. So, that sort of anti sort of macro sort of view is being negated by those improving demand outlook.
So does that make it a true super cycle, or are we still trying to work out what the supply?
I think it does. I mean, there's really no sign at the moment that there's a long-term structural uptick in supply that can meet this outlook for demand. So, I do think we'll eventually get there. I mean, it's going to be a bit of a windy, bumpy road initially. The next 18 months will be quite interesting. I mean, there's still debate about, the economic outlook more broadly. So, that could provide some headwinds. But I think overall, it is really developing into a broader structural trend higher for a lot of these metal markets.
Is there a correlation with the China old economy starting to really fade now?
Yeah, I think so. I mean, we've had several years now, 5 or 6 years of weak sort of housing driven sort of numbers out of China in particular, and China and copper's really buffeted those recently, and I think the continued sort of focus on that new technology or new energy technology sectors in that country are offsetting all that weakness. So we're seeing reasonably good levels of growth coming through from China.
Dan, always great to have you with us. Daniel Hynes is a senior commodities strategist at ANZ. Shery.
And take a look, Heidi, how other assets are trading at the moment. Of course, all to do with inflation concerns, as you've been discussing there with Dan, when it comes to the Iran war headlines and commodities. But you can see right now the dollar holding steady. We had seen its best day since mid-May. We had some upside surprises in U.S. data overnight, including the ISM services activity, showing that it accelerated in May. We had new orders improving, consumer demand really staying resilient. We also had the strongest private payroll gains since January of 2025. So we had seen Treasury yields climbing in the overnight session, the 10-year right now holding at that 448 level. We're seeing a little bit of downside pressure continuing on U.S. futures. Of course, we had seen that halt of that incredible rally that we've seen around the exuberance of our artificial intelligence. But we're seeing a little bit of that soften in today's trading, with software, for example, in the overnight session underperforming. But it's really to do with what markets are pricing in right now, whether it's what's going to happen to the Iran war, but also around inflationary risks around energy prices. We had already seen the Fed Beige Book, for example, showing inflation pressures accelerated across most districts. Now, breaking news on the Bloomberg as well, the USDA now confirming the first deadly screwworm in U.S. cattle. So this confirmation of this new disease in U.S. cattle since 2016 now could trigger potential restrictions around supply chains. What will that do to food inflation will be another key question. More ahead. This is Bloomberg. Take a look at how currencies are trading at the moment, with the dollar holding steady after we saw its best day since around mid-May. Of course, we have Fed rate hike expectations. We had also positive surprises from U.S. eco data in the overnight session, not to mention, of course, more geopolitical tensions around the Iran war. Although we have heard from the U.S. that Israel and Lebanon have agreed on a ceasefire. We've also been following Bitcoin prices. Take a look at that, below 65,000 for the first time since March. And just remember, what was it? Only 7 months ago, we were at that $120,000 level. We, of course, have seen the accelerated pressure on selling after the sale from Strategy of the 32 Bitcoin. So we'll be watching for further developments in this space, which definitely not trading like a safe haven asset in recent days, although that was, of course, one of the narratives around crypto before. And, of course, we've been following the Japanese yen as well, trading around that 160 level against the U.S. dollar, despite the fact that we have heard more hawkish rhetoric coming from the BOJ Governor Ueda. Let's bring in our chief correspondent for FX and rates in Asia, Ruth Carson. Ruth, so we have heard now Governor Ueda talking about how inflation risks loom larger than potential growth risks from the Middle East crisis, and yet yen selling seems to continue. What's happening?
Traders are signaling that words versus action, action matters more. Will the BOJ hike rates in June and deliver more hikes? That is the question now that is on investors' minds, which is why we're seeing dollar yen at around 160. We have heard, commentary from Governor Ueda. We have heard commentary from authorities in Japan who are all signaling, look, hawkish signals here. But look, investors are going, oil is still expensive. Japan's still an energy importing nation. Inflation is a problem in Japan. And at these levels, you still sell the yen. Options markets are certainly signaling more yen weakness as well. So all eyes on the BOJ and the upcoming meeting in June. Markets are pricing around a more than 80% chance of a rate hike. The question is how much more is coming?
What are the options traders signaling when it comes to what's next, right? Has the weakness gone too far? Is there more to push?
Absolutely. If we look to, say, the end of the second quarter, the end of June, traders in the options space are signaling around a 33% chance that dollar yen will trade at around 163. Now, that's 3 yen from when we are today, and that's after obviously Ueda's commentary as well, hawkish commentary. So absolutely, options traders are going, we are assigning more yen weakness ahead until something changes. It could be BOJ hikes, bigger hikes than expected, for example. It could be a resolution to the crisis in the Middle East. But until something truly breaks, yen weakness is likely here to stay.
And of course, we're watching potentially authorities stepping into the markets, right? I mean, every time I talk to ministry officials, they deny that they look at a specific yen level, and yet the 160, very important.
Absolutely. Markets love the big round numbers. 160 is also a figure that a lot of investors are fixated on because it was just over a month ago that we saw the authorities did step in to bolster the yen at around 160. So for many, whether you're in New York, you're in Tokyo, you're in Singapore here, 160 is the line in the sand where people go, I'm going to be on high alert. Let me start hedging some of my positions. People are still selling the yen. Will there be more yen weakness ahead? Absolutely. But let's perhaps take some profit here and prepare some firepower to reload in case authorities do wade in at 160.
The Korean won has not benefited from the AI exuberance in the country's equity markets at all, right? In fact, dropping at the open lowest since March 31st. Authorities coming out saying that they'll take action if the one-sided movement is seen. What are the fundamentals when it comes to this selling that we're seeing in the currency?
Yeah, absolutely. And it is actually a conundrum that is weighing on a lot of strategists and investors' minds as well. You've got the Kospi going gangbusters in theory, even though it's sort of under pressure a little bit in recent sessions. But the currency is so weak. It is the weakest in Asia today, in fact, after reopening from a holiday. And authorities are coming out to say, look, we're watching the won as well. It's not just the yen that is being watched. Now, a lot of it has come down to sentiment. The Korean currency is often seen as a barometer for risk appetite. It is very much a tech FX as well. And if there's any hint of pressure in the tech space, on the AI space, for example, then the won will suffer. The won will definitely be in the selling crosshairs. And we're seeing that play out today. Now, also remember that foreign investors have sold Korean stocks for 18 straight sessions. That would definitely have been piling pressure on the won as well.
Our chief correspondent for FX rates in Asia, Ruth Carson, there with the latest, of course, on the markets as we continue to follow not only the Korean won, but the broader emerging market space, because we have seen the downside pressure when it comes to EM currencies, especially around all of the geopolitical tensions. We have seen oil prices rising, although in today's session, a little bit of downside. This and President Trump's latest tariff plans of at least 10% on imports from 60 trading countries has not helped the narrative around EMs, especially in Indonesia. The rupiah really near those 18,000 record low levels. So markets now pretty much on guard for any potential intervention from authorities. We have more ahead on the Asia trade. This is Bloomberg.
Top corporate stories that we're tracking. Phil Ackman is looking to sell his stake in Universal Music Group just days after the world's largest music label rejected his takeover bid. The sale would raise around $1.7 billion for Ackman's Pershing Square at the top of a marketed range. A source says Ackman is expecting a profit on the transaction of more than $600 million. Broadcom shares fell in an extended trade after the company delivered a disappointing forecast for AI chip revenue. It sees third quarter AI sales of $16 billion, where analysts had expected $17 billion on average. The full year forecast of $56 billion was also shy of estimates. Broadcom says it's making progress with AI customers, including Alphabet, Anthropic, and Meta. Shery.
And Heidi, let's get some market calls that we're following today. DoubleLine portfolio manager Robert Cohen says AI debt will almost certainly reach bubble levels eventually. Cohen told the Bloomberg Global Credit Forum the chances are high given the history of heavy investments in areas like railroads and the internet. He says money managers should focus on companies with strong balance sheets and investments with strong protections.
Credit bubble would be credits that are unable to pay back the debt, and it seems pretty obvious at issuance. So we saw that in energy, where there were bonds that just you knew they couldn't pay them back, and they defaulted right away. So credit instruments that require a lot of growth, I wouldn't call a bubble, but I think that credit that basically is doomed is a sign of a bubble. We're not there yet.
Bank of America CEO Brian Moynihan says AI and tech spending is paying for itself. Moynihan says the massive amount of capacity building in anticipation of demand is stimulating the economy. Moynihan spoke to us exclusively about how markets are digesting the surge in AI spending.
At some point, the revenue and the earnings multiples and the cash flow multiples all have to come in sync. And right now, you're in that phase where there's a mass amount of capacity building anticipated of demand. And so when you look at it, one of the ways that we think about is we are a buyer of these services, and a big buyer. $13 billion in technology a year, $250 million this year in 26 on AI-related spending. And so the question is, what's the affordability of that? That will be the interesting question, how all this comes together. But right now, it's a heck of a stimulus in the economy, that going on. But the other part of the economy that we see is the small and medium-sized businesses. And it's interesting. As you think about them over the last year we had Liberation Day, and that was confusing for people. And then we had the tax law finally got done, that settled confusion. Then had trade, then you had immigration policy, that confused people. The deregulation, they looked for that. As you watched in the fall, they're pretty sanguine. They said, look, I can see how this all plays out. And then a lot of it got put back on the table. And so I think what you see in the small, medium-sized businesses, there's a lot of uncorked potential there. They can borrow on the lines of credit. They're borrowing a little bit more. The loan growth is solid. They're mid-double digits and things like that, which is good loan growth. But they have so much capacity if they just had a little more certainty. And that's why they really want the war to end. So their input prices will come back down, because we see the gas pump. What really happens longer term is the products made with petroleum products come.
So kind of like through. At the gates, ready to go once
they're ready to go, and they just want certainty. Because if you're a big company like ours with 200,000 people, you have lots of people who pay attention to all this and tell you what's going on. Our research team, the best in the world. If you and I owned a business and we were doing something, you have to do all that work yourself. And the easier to do that work, the more time you can spend on creating the revenue. So I think there's a little bit of a pop left out there beyond the AI, which is an unbelievable amount of spending and et cetera. There's another pop when general business gets more confident about the future path.
Bank of America Chairman and CEO Brian Moynihan there, speaking exclusively with Bloomberg's Danny Berger. Let's take a look at how we're setting up when it comes to the start of trading across Greater China. A pretty muted picture as we see the markets are online at the moment. There's a fair degree of concern as to these cross currents of both some progress being made on the geopolitical front. The Broadcom story is clearly worrying investors as we've seen these valuations for AI-related and chip-related stocks just go up so much, right? But take a look at the picture. We are expected Hong Kong tech to continue a little bit of weakness there, 0.7%. Taiwan, of course, the biggest beneficiary other than South Korea in this part of the world from the AI story, off by about 1%. And FTSE A50 China futures muted 0.4%. But of course, we also had that separate AI-related fundraising story for China with DeepSeek set to raise over $7 billion with up to a $59 billion valuation, according to reports there as well. That is it for the Asia trade. Our markets coverage continues with the start of trading in Hong Kong, Shanghai and Shenzhen. The China Show is next.